Good evening, everyone. I am CA Vikas Gupta, and I welcome you all to yet another webinar on global trends in internal audit, a look ahead, organized by the Internal Audit Standard Board (ICI). Today, we have with us CA Purav Kala sir, CA Prashant Daftari sir, and CMA TV Venkatraman sir, who would be taking the technical sessions followed by question and answers. Before we start, I would like to welcome CA Nakul Saraf sir, Chairman, Jammu and Kashmir branch of NIRC of ICI, for the opening remarks. Welcome, Nakul sir, and thank you.
Thank you, Vikasi. A very good evening to all of you. On behalf of J&K branch of NIRC of ICI, I would like to welcome all of you for today's webinar. Today we have a webinar on global trends in internal audit, where I would say internal audit is now under greater scrutiny to be able to efficiently identify key risk and guide organizations through the next few years. Some of the trends may be artificial intelligence or even soft controls, which shall be discussed by our learned speakers in detail today. New trends have even emerged in internal audit that will change the way we perceive audit for the years to come. Further, I would like to thank the Committee on Internal Audit Standards Board, chaired by CA Charanjot Singh Nandaji, along with Vice Chairman CA Gyan Chandra Mishraji, who have been doing great efforts to enhance the knowledge of our professional colleagues and stakeholders at large. I would also like to thank our speakers for giving their valuable time. I hope this program will benefit all the members at large. Thank you.
Thank you very much, Nakul sir, for your kind remarks. Now, I would like to welcome and thank CA Charanjot Singh Nanda sir, Chairman of Internal Audit Standard Board. Nanda sir is a Central Council member of 25th Council of ICI, Vice Chairman of Banking, Financial Services and Insurance Committee. He was the member Quality Review Board set up by Government of India. He was a Central Council member from 2004 to 2016. Sir was the chairman of Committee on Internal Audit and also the chairman of Committee for Members in Industry of ICI. He was a member of SEBI Advisory Committee on Primary Market and Mutual Funds. Sir has also represented ICI on SEBI Committee on Disclosures and Accounting Standards. He was the convener of the expert group constituted by MCA, Government of India, on Investors Protection. He was also a member of the South Asia Federation of Accountants Committee on Professional Accountants in Business. Welcome, Nanda sir. Thank you for again giving us the opportunity.
A very good evening, ladies and gentlemen. I am truly honored to be amongst you on yet another very astounding program on internal audit, the way forward. We have given a special name to it. We have coined a new name. It is Global Trends in Internal Audit, a look ahead. Ladies and gentlemen, I am joined here with CA Nakul Saraf, who is the chairman of J&K branch. Two of my very revered speakers, CA Purav Gala Sahab, CA Prashant Daftari ji. The moderator of today's session, CA Vikas Gupta. I also have Mr. Arun Agarwal from the board and Nisarg from the technical team, along with so many people who have joined from all the nooks and corners of the country. Ladies and gentlemen, I want to tell you one thing very candidly. Internal audit essentially is a management function. And therefore, if you intend to scale newer heights, you have to be more innovative. You have to abreast with newer changes which occur all across the globe. And more importantly, you should be willing to learn. Today, we have three very important topics. The first by Mr. Purav Gala, who is Assistant Vice President, Internal Audit with Hyderabad Industries Limited, a person with great impetus, a great thought process. He would speak on identifying red flags and report writing by internal auditors. Over the years in profession, I've seen you identify so many things, but how you report is most important. Statutory audit restricts you because the reporting format is predestined, but it is not so in internal audit. You can have your reporting pattern. Internal auditor is responsible not only to the client or the stakeholder, but to the regulator and governments. And he ultimately serves the board or the audit committee as the case may be. Therefore, every important finding should be with the board so that they are able to effectively take a call on that. The second speaker, again a pioneer in the internal audit industry, CA Prashant Daftari, who would speak on embracing technologies during internal audit and meeting stakeholders' expectations. Ladies and gentlemen, apart from internal audit standard board, I chair digital accounting and assurance board, which totally deals with forensics, technology, and information system audit. And by God's grace, I'm the chairman of SAFA's 9 countries IT committee. I can tell only one thing, that in today's dwindling times, if you intend to go at the top, your only help is technology. Technology gives us 3 very important things. Number 1, technology ensures that you don't only go and work on the sample, you have the whole database on which you work. Second, technology ensures that you bring out risk-free results. And third and most important thing, technology ensures that work is done in a total professional manner. No holidays, no wife, no spouses, no health issues. Machine will have no issues. So whatever machine does, whatever time it does, it will give the most accurate and appropriate results. So ladies and gentlemen, Mr. Daftari's session would be a great session. And the third, again, is a very important and pertinent topic, which is taken by none other than CA TV Venkataraman, a very good friend of mine. Mr. Venkataraman will speak on internal controls over financial reporting, ICFR. Not only important for internal audits, but for statutory auditors also, because testing of financial controls and internal controls is very, very important. I want to tell you, over the years, you will start understanding that the board looks to the information which is shared by you. And therefore, more importantly, as chartered accountants, we need to have a rare skill to perform. And that is only created by your hard work, by your perseverance, by honing your technical skills. I am reminded of a couplet which says, "Gar khairat mein milti kamyabi to har shakhs kamyab hota hai. Gar khairat mein milti kamyabi to har shakhs kamyab hota. Fir qadar na hoti kisi hunar ki aur na hi koi shakhs lajwab hota." If you see people like Mr. Gala, Mr. Daftari, Mr. Saraf, Mr. Gupta sitting here, they have over the years molded their time to create value and worth. And therefore, I say one thing, what may come. The board is at your beck and call. I started this board way back in 2004 when I joined the council. It is very close to my heart. I am a phone call away. You can, if you don't have my numbers, you can go to ica.org and extract my numbers. Anytime, any specific topic you want guidance, we will ensure that the best of the speaker of the country will come and address us. Ladies and gentlemen, only by your hard work, perseverance, you will scale newer heights. And when you scale newer heights, my profession, which was set up an act of parliament way back on 1st July 1949, when even the constitution to this great country was not promulgated, you're aware that the constitution was promulgated on 26th January 1950, will feel great and happy. So wishing you a great session ahead. We have 2 of the speakers. Third, Mr. Venkataraman will join us sometime. I wish you a great, happening, astounding, fantabulous session. Please go ahead and take the maximum benefit of this. So I sign out now. Over to Mr. Vikas Gupta for his further proceedings. Mr. Gupta, the dice is all yours now.
Thank you very much.
Thank
Sir.
you.
Thank you for your kind words. So now, without any ado, we begin with our technical sessions. The first topic of the evening is identifying red flags and report writing by internal auditors, which shall be taken up by CA Purva Gala sir. Sir has served as a past president of Institute of Internal Auditors, Bombay chapter, and also a faculty on corporate governance at the V School. He was a member of the Continuing Professional Education Committee of WIRC ICI for year 2012 to 13. He is also a member of the CVO CA Association and regularly pens articles for the various journals. Sir is currently heading the internal audit function at HIL, Hyderabad Industries Limited, which is a part of CK Birla Group. Prior to HIL, he was heading the internal audit function at Raychem RPG, a joint venture between Tyco Electronics USA and RPG Group India, as well as one of the leading consumer durable brands in India. A chartered accountant and an MBA by qualification, Sir started his career with Gala and Gala and then moved to Singhi and Company, Baker Tilly's global assurance practice. With over 18 years of experience in internal audit and corporate governance, Sir has had opportunity to work with various global companies and Indian corporates in India and abroad. Sir was also associated with Indorama Group, Netherlands, and Protiviti India in the consulting space. Welcome, Purav, sir, and thank you for sparing your valuable time for all of us. Thank you and welcome.
Thank you, Vikas. First of all, a very warm good evening to all the members of J&K branch. Charanjit sir, always a pleasure. You are a source of inspiration for not only the entire ICI forum, but professionals outside the forum as well. And you have been passionately driving the cause of internal audit, and which continues to inspire us more to do for this noble profession. Nakulji, greetings, and to all my fellow participants, colleagues, chartered accountant professionals from J&K. I will start the presentation shortly. But before I start, Charanjit Singh sir mentioned very important point. If at all today we are seeing recessionary trends, which part of our service line as a practicing member will help to deliver value to our clients, I think it is internal audit. Through internal audit, you can definitely provide that spectrum of service, that niche domain of your expertise, wherein the client will definitely, give you more business, more, more work. And the satisfaction and the gratification of providing internal audit services, I think it is second to none. Let me just put up a presentation. Can somebody confirm? Is it visible? Is it in screen mode?
No, it is not in full screen mode, sir.
There you go.
Yes, it is now.
So what will we cover? What is internal audit about today? How do I identify red flags? How do I write a report? And how do I convince my clients? There is a very fantastic line I say, and that gives the potential of internal audit. In God we trust, all others we audit. This line itself shows the potential that internal audit has to offer, or a statutory audit. In God we trust, all others we audit. Let me set the agenda for today's presentation. Why is internal audit necessary? What are the expectations of management stakeholders? We will do some case studies where we identify red flags. Significance of communication in internal audit, and followed by a Q&A. So in communication, we'll cover report writing. Internal audit, why is it necessary? How has it evolved? What is the current state of internal audit today is what we'll cover. So internal audit, as per definition, is an independent objective assurance consulting activity designed to add value and improve an organization's operations. It helps an organization accomplish its objectives by bringing systematic, disciplined approach to evaluate, improve the effectiveness of risk management, control, and governance process. That is a technical definition. Who has introduced the internal audit? How old is it? Any guess? This is a man who has introduced internal audit. Chanakya. Vishnugupta Kautilya. He introduced the concept of auditing in his book Arthashastra in 300 BC, for those who have not read. In fact, the book contains the premise for accounting standards which we actually follow today. I will quote an example. He tells that Gopas, who are the accountants, must record what has been received, must record what has been sent, must record the taxes that are collected, must record the revenue that has been generated. And this all we see today in accounting standards, what we are following. Post World War II, with the progress of management science, the concept of internal audit has regained relevance across corporate boardrooms. So, what is important? You see a lot of businessmen, entrepreneurs, corporates always vying for growth. But when you vie for growth, technically, what happens is the controls, the processes go for a toss. But what is most important is a controlled growth strategy. You see a lot of companies which, in their just for growth, have actually bypassed controls, and as a result of which they do not continue to exist today. So governance is absolutely important. And when we speak of governance, internal audit is the only function that can assist the board, the promoters, the stakeholders today in fulfilling the responsibilities of controls, giving them assurance whether controls are in place or not. When we'll revise the examples, जब हम लोग example देखेंगे, you will be able to relate what I'm trying to say here. Why is it necessary? What are the 4 pillars of governance? The 4 pillars of governance are basically senior management, external auditors, internal auditors, and the board of directors. And the internal audit plays a very pivotal role in bridging the gap between these 4. It will assess the ethical climate and the effectiveness of operations, serve as organization's safety net for compliance with rules, regulations, and overall business objectives. It is no longer now considered a watchdog. Today, we are considered as a business element. How do we provide the value to governing bodies and management is what is expected from us. We are an objective source of independent advice. Friends, believe me, if you speak to anybody from your colleagues or friends or acquaintances from Big Four, one of the biggest revenue streams today is actually internal audit. Why is it necessary? Today, if you look at Companies Act, if you look at SEBI guidelines, if you look from a minority stakeholder protection purview, all listed companies are now mandated to have internal audit in place, which is just I'm sure that going forward we are looking at startups also may be mandated to have an internal audit system in place. In fact, even though it is not required, a lot of investors today mandate that startups have a very strong internal audit system in place or a function or a department in their companies. So world over, managements are now focused on getting maximum assurance from internal audit. Focus is shifting from risk-based approach to adding value approach. So should audit be a cost center or profit center? Because a lot of your clients, a lot of corporates I have seen from my experience tend to look at internal audit as a cost center and not a profit center. But tell me one thing, I'm just giving you a related example. Will a state government decide the value of law enforcement agencies or the cost of law enforcement agencies as a profit center or a cost center? No. So if I were asked this question from a client that what is it that you would give it to me in return, I would say that I would give you reasonable assurance. And reasonable assurance has tremendous value, as you will see from our examples and when we decide. So in this presentation, I will also be helping you to understand how do I actually plan my audit. मैं audit plan कैसे बनाऊं? If I were to be given a company and told that you can start an internal audit or you give a proposal for internal audit, how would I determine my plan? And what is better, in-house internal audit or outsourcing. Anything is better as long as it delivers reasonable assurance. Internal audit is able to pinpoint savings that surpass its cost. The management and even the board will claim credit on robust corporate governance. Friends, my view is very clear. Value addition should be eventual outcome of internal audit reviews. It should not be the sole focus area. We are not consultants who would increase the profitability of the company or reduce cost by doing internal audit reviews. Value addition should be an eventual outcome. So if I am an internal auditor, I would clearly state that this is a cost that is bound to incur, but this will give you assurance. This will give you peace to sleep comfortably at night to a promoter. That I'm testing your controls and giving you comfort that yes, your controls are in place. So we should provide assurance to governing bodies, executive leadership that controls are in place, risks to objectives stand mitigated, and operations are in compliance with laws. There is tremendous value in this assurance. And hence, the cost of providing assurance should never be thought from a perspective of return. I think we need to change the mindset of our clients if that is the case. But this is absolutely important. What is better and what is reasonable assurance, friends? It is but obvious and practical that you cannot vouch 100% of all transactions for your client or for the corporate. I do not do it for my company where I had the audit function. So we give reasonable assurance. Reasonable assurance is based on what samples you do, how do you approach, what understanding of business you have, how do you envisage what controls need to be in place, and so on and so forth. In-house internal audit or outsource internal audit, which is better? I think professional competence is the key. Oversight and responsibility of internal audit activity cannot be outsourced. So that's for whether you have an in-house function or an outsourced function, it does not matter. What is important is actually the competence. Today, trends indicate an inclination where you have a mix of in-house function as well as somewhat towards outsourcing. But a lot of SME clients I have seen have a tendency to appoint chartered accountant firms. And I think that itself is a potential for all of us members in practice to capture and leverage that advantage. So how does internal audit function as you ensure reasonable assurance? How do I plan an audit? Suppose if I'm given a company, a listed company of 500 crores, मैं plan कैसे बनाऊं? So my approach should be risk-based. It should be based on the risks that a company faces, a recommendation of our statutory auditors, and if there are any specific requests from management, business heads, or the audit committee, if it is a listed company. So formulating an internal audit plan is absolutely crucial element and one which requires prudential judgment. Let's come to a practical example. You are given, say, a company XYZ. What I do is I speak to all the stakeholders. So there are two SBUs, business units of that company, SBU A and SBU B. And I identify or I jot down, okay, these are the risks. Basis these risks, I will formulate a plan. I know that all these four areas or the risks that are identified in front of your screen cannot be done in 1 year. So my risk register बनाऊंगा, on a simple piece of paper, I will just jot down what are the risks that a company is facing. What kind of risks? I can go and refer the balance sheet. I can go and refer and speak to the senior management and jot down, and it will not even take an hour's time or half an hour's time to understand what kind of risks the company is facing. So I've just prepared one example. As this company has got two SBUs, SBU A and B. Okay, SBU A is facing a risk, which is extreme risk of capex. They have, for example, incurred money for a capex project and that is getting delayed. As a result of which, their business plans, their forecasted revenue is going for a toss. The second risk that we have identified is on compliance. Because of contract workers that are engaged in direct production process, there is a risk that fines and penalties could be laid. As you are aware, contract workers under the Indian Contract Workers Act cannot be engaged in direct production process. For SBU B, working capital is an issue. Product margins are in negative. Higher lead time for procurement. Receivables are slow in getting liquidated. There is overall stress on working capital. Business continuity impact in short term is possible. Corporate finance, taxation. You are aware when there was sales tax and C forms collection was always a challenge. So there is a risk that the company may have to pay additional sales tax penalties if form Cs are not collected on a timely basis. If I ask you now, these are the four risks. आप इस एरिया के हिसाब से क्या ऑडिट करेंगे? What will you choose? And this has to be done covered in 2 years, for example, or say 6 months. Which is the area that I'll pick up first for my first half, and which is the area that I'll cover for my second half? What representation will I give to the management? There are 3 risks which are extreme and 1 is high. Shivani, you will have to put it on mute. You have to mute yourself. Yeah, thank you, Shivani. But is this data enough? Friends, no. When we do chartered accountancy, there is a concept called materiality. We should not ignore materiality. So what I will do is, look at this data point. Same risks, but I've just documented materiality in question. Now, it is absolutely clear what should I do first, what audit plan should I make, and present to my stakeholders or my clients. As you can see, I will first propose to do the audit for SBUP because the risk is extreme, 9 million. So documenting the materiality in question is always helpful. Now, how do I gather this information? There is some aspect of judgment that is involved. There is some aspect of reading and going through the documents, history, understanding the business, and then documenting it, and then proposing it. So an ideal risk-based audit plan would be like this. I will cover procurement, sales, marketing, inventory management of B first. Why will I take a review of contract labor compliance? Because it is a statutory requirement. Non-compliance can always cause closure of operations, and hence statutory, anything that has got to do with statutory compliance has to be taken or reviewed on priority. Review of project A can be done for the next 6 months. CST form collections against finance that can be covered in the next 6 months. But apart from this, friends, these are, I'm telling you from my own experience, that apart from this, you should plan audit of an exceptional area. Rewards and recognition, leave pattern of employees, security system, insurance claim settlement, ERP login review, guest house expenses. Take it from me, I am telling you with assurance, these are areas where you will definitely get some surprises. Over the past 2 decades, I've been doing audits, and believe me, these areas are something that always throw up surprises, and hence these exceptional areas should also be done or covered as a part of your review. What else is important, friends? How is internal audit? So again, technology. So this is again a subject matter of audit, friends, as we say. Why exactly root causing ke glitch kyun hua? So anyway, so this is just a real life scenario where you can um, give value add to your clients. I will give you one example of an ERP system or a technical. Though we are chartered accountants, but for us, understanding technology is not that difficult, which may be to other professional counterparts. Let me give you an example. So what I do is suppose my client is using an ERP Y. Okay, what should I do when I do ERP reviews? I'm just giving a simple example. I will take, say, a purchase module, a sales module, a stores module. I will understand which modules are there in those ERPs. Then I will understand the functionality. Which user has got which rights to perform which transaction. So if I say in my purchase, there is a functionality called PO user, which allows the user to generate purchase order. Then in my stores module, there is a functionality which allows the stores guy or the user to receive that material against the PO. And also there is a functionality in my module which allows the user to issue material for production. Okay. Now, as an auditor, what should I do? What should I tell my stakeholders? That a person who is actually allowed or entitled to create a PO, if he is the same person who is allowed to receive material, is it not a risk? Because tomorrow he may receive a PO and he may receive material and he may issue it as consumed, which itself is a risk. So look at this. I have now tabulated where for a SBU A, one user is allowed to have rights to create PO. The same gentleman has got rights to receive material. The same gentleman has got rights to issue material. Is this not a risk? It is, because he may create a fictitious PO. He may create a fictitious entry of receipt. He may create a fictitious entry of issue. And if he collaborates with the treasury guy who is responsible for payment, lo and behold, you will be able to do nothing. So this is the kind of value add you can provide to your clients when you do the reviews of an ERP. But if you look at SBUB, I think the duty, or what we call in internal audit parlance, is segregation of duties. The segregation of duties is clearly defined as one person will be only responsible for purchase, and the stores guy is independent and he is accountable for whatever material is being received. So there is proper segregation of duties. In first case, there is no proper segregation of duties and hence there is a risk. Because the same guy is allowed to raise PO, the same user is allowed to receive material, and the same user is allowed to issue the material. So this is another example of ERP controls. So let's extrapolate. I am a purchaser, and when I'm raising a purchase order in the system, I'm actually getting two options. One, to set the maximum limit for over receipt of material in percentage against order quantity, or leave the field in option blank. या मैं percentage specify करूँ या I leave that blank. Now, so this, how do I come to know? This is when I actually review the system. I sit with the users and understand how they punch orders. I'll give you a small example. Suppose a lot of raw materials have natural qualities to evaporate. That's why purchases when of such materials are made, there is always a factor for tolerance. So I may order in quantity for say 100 tons, but I know because of its evaporating nature, the supplier will actually supply say 103 tons. So 3 ton possibly there is a possible that in transit it may get evaporated. So by the time it reaches me, it could be 101, 102. So in that case, the purchase order in the system will allow percentage of tolerance that yes, I can accept quantity over and above this much percentage of the quantity that is ordered. So ye dekhiye again, I have taken the purchase down, and now I know whether the over receipt tolerance has been punched while raising the PO or not. So PO quantity is 700. Quantity that is received is 800. There is no over receipt tolerance set that is set in ERP. As a result, the company has actually sourced 100 quantities extra. This could be a business call or this could be a deviation that should be reported in audit. But this is what I'm trying to highlight. कि ये audit approach ऐसा होना चाहिए. So if I were an auditor, I would tell that compulsory identify all those items where there is over receipt because of their natural qualities, where over receipt is a possibility, and set the limit in the master itself. Don't give that right to the user only to fill, because he can still play around and say galti ho. So if you feed it in the item master, that time when the PO raises, automatically this quantity will get reflected. So this is again a value add how we can give and protect the interest. So a lot of times what happens is IT वाले और ERP वाले जब भी मेंटेनेंस एक्टिविटी करते हैं या फिर कुछ अपग्रेड करते हैं, तो these controls are all patch controls. There is every possibility when they do maintenance, these patches get open and again nobody realizes this. So you need to keep testing again and again over a period of time to ensure that they are working and give the assurance. See, now if I set the percentage, automatically the GRN cannot be made over and above what you have actually received. I was telling you when we are talking about formulating an audit plan that you should do audit for low hanging fruits like, leave pattern of employees, canteen, security system, security management. These are all low hanging fruits. I'm just putting a presentation in front of you. You need to highlight how and when the fraud can happen. So company has a canteen facility. Canteen is managed by a contractor. Every employee is given a meal coupon booklet. Booklets are serially numbered. And for every month, one employee will be given a coupon booklet of 26 coupons. There is no expiry date. Employees can continue to use the coupons till the booklet is exhausted. Charges are subsidized and it is deducted from employee's salary. Employees submit meal coupons to the canteen contractor. Contractor will come collect the coupon. Company is invoiced by the contractor basis the number of coupons collected and rate is fixed for each meal. Coupon issued to employees have been correctly deducted from their salary. Please analyze how a fraud can happen. Bills and invoices are submitted by contractor on monthly basis along with coupons. Invoices mention the number of coupons and the agreed rate per meal coupon. There is no process to verify the bill and corresponding coupons. Payment is made by accounts directly to contractor based on the invoice. What kind of fraud can happen? Remember, there is no validity date for the coupons. I think that is a flaw itself. So I do not know which employee is submitting coupon which he has received when. At the most, in these cases, what I can do is annually or periodically, I need to reconcile the number of coupons that have been issued to employees and number of coupons that have been billed by the contractor. It should match, but there is no accuracy here. Charanjit Singh mentioned about technology. I think as auditor, I would recommend that nowadays you need to use biometrics for such activities. Biometrics are shortly fraud-free activities or control points. So in this case, what has happened is the contractor himself actually printed more coupons and added because he knew that nobody was checking, and he took the company for a ride. This is possible. A lot of times it happens. So without wasting time, let me come to the last part of this because we have already overshot time. Significance of communication in internal audit. People to people connect, report writing. So the word C is most important. Communication at all levels, conduct of independence. We should listen patiently to auditees and reportees. How many of us actually network with our auditees? Because we are the only function that has open access across all levels of management and resources. I have a video, but with given the time constraint, I will share it and you can see it, the participants can see them. Let's come to the internal audit exercise. It is the most crucial part of an audit review. How do I report sensitive observations? On an average, let me tell you, friends, CEO, CFO will not give you more than 5 minutes to your report, and you just have that much time to catch his attention. Actually, how do you do it is a skill that you have to develop over a period of time. It should catch the reader's attention. It should prompt him to take action. Does your report contain the general background of the area review, audit observation along with best practice, impact, risks, recommendations, management response, agreed action plan? Do you issue covering letters along with audit reports? Does your IA report mention appreciation for prompt action taken during an audit review? Even if an auditee disagrees with an auditor, the difference in opinion should be reflected in your audit report. So, do you take a sign off from the auditees before issuing a report? Does the internal audit state the date of committed action and responsibility assigned for committed action? Does your report actually link the risks associated with internal audit observations? Does your report quantify the potential economic benefits, confirm loss values, and the methodology with such quantification? Does your report mention limitations? In sync with SIA 9, do you issue a discussion draft report, formal draft report, and a final internal audit report? This is a procedure that we follow. That discussion draft, formal draft, and a final internal audit draft report should be issued. So let's come to the example. You are doing a sales review of division X, and you note that for this period, the sales are 500 lakhs. Breakup of sales is as under. Sales to direct customers is 300 lakhs. Sales to dealers is 200 lakhs. Total number of dealers we have is 20. Your interaction with process owners and business head confirms that the company is yet to ink agreements with dealers and distributors. How do you draft an observation containing the mainframe observation, recommendation, impact, risks, management response, and agreed action plan? Your observation should actually depict how you can add value. I am again repeating. एक review आपने किया sales का, breakup is sales to customers is 300 lakhs, dealers is 200 lakh, number of dealers is 20. When you interact with process owners, the auditees, and the business head of the company, you come to know that the company has not inked agreements with dealers and distributors. So that itself is a control deviation because company needs to ink agreements with dealers. So mainframe observation, recommendation, impact, risks, management response, and agreed action plan. At least इतना तो होना ही चाहिए आपकी report. And you should draft it in such a manner that when you present it to your client, promoters, CEOs, CFOs, he needs to pick up the phone and ask the auditors why and why this was not done. Please get this done. That's where the value is. Audit observation. Agreements, look at the caption. Agreements not inked with dealers. There is a potential opportunity to improve working capital scenario. You are already incentivizing him to take action when you say potential opportunity to improve working capital scenario. So you just give a brief background. SBU is selling this product directly to customer or channelizing sales through appointed dealers. Total sales to 20 dealers are derived at this much for this period, constituting this much percentage of sales. If you want details, refer annexure. A lot of my colleagues I've seen in the past, they print the annexure here. Please, nobody has time to look at the annexure. If somebody wants it, you just need to insert an attachment here. They will look at it. But it's not advisable to copy paste detailed annexure on the mainframe observation. Absence of written contracts, agreements implies increased financial and operational risk of business unit. An opportunity to improve working capital exists in lieu of security deposits, which can be obtained in case agreements are inked with existing dealers. तो मैं ये बोल रहा हूँ कि एग्रीमेंट करने से आपको सिक्योरिटी डिपॉजिट भी मिलेगी and your working capital scenario can be improved. What is my recommendation? Agreements acts as a medium to ensure fulfillment of performance between two parties, and in case of legal dispute, they provide official recourse. And that's why we feel independently that the division or the business should ink agreements with all the 20 dealers on a priority basis. It's not yet finished. I have to tell the impact also, the risk, and take management response. Who will be responsible and what is the target rate of action? Risk, typically observation, mainframe observation, risk, impact, and management response is what the stakeholders will look at. Financial, non-obtainment of security deposit increases credit control risk. Interest on security deposit amounting can be improved working capital efficiency. No control over dealers in case they push sales of competitors' products. If I ink an agreement, I will obviously tell them, okay, bhai, you will exclusively work for me. Or at least that will become a bone of negotiation. Increases risk of reduced bottom line since dealers are not communicated in writing the minimum sales price at which they can sell to customers. मैं एग्रीमेंट करूंगा तो मैं लिखूंगा ना डूज एंड डोंट्स. मैं ये भी बोलूंगा कि मिनिमम सेल्स प्राइस में आपको मंथली, fortnightly, depending on the business model, will be communicated to you and they have to sell this to customers. Territory, customer specific rights cannot be assigned because everything is verbal. Verbal has no legal sanctity. Absence of control over periodical budgeted target sales dealers. This can also lead to dealer favoritism. Increases legal risk arising out of dispute. So management response is noted. SBU is in process of initializing legal agreements with all its dealers distributors. Is also contemplating obtainment of security deposits from appointed dealers. Responsibility, target date of action. This is how crisp it should be. कोई भी ऑब्जर्वेशन आपका इतना क्रिस्प होगा तो 100% I can assure you from my experience, people will be bound to take action. People will read. People will get their juniors or their colleagues to act on it. But if I write an history, let me tell you, as auditors and compared to auditees, the auditees know their business very well. Unless we match them and make our work crisp, our report crisp, we will not be able to add value. So story writing, gone are those days. Is it clear? So if there is any Q&A, I'm happy. Otherwise, for want of time, we can. I'm sure Prashant is also waiting, and Prashant.
Yes. We do have one or two questions, sir, and thank you very much for this insightful session of yours. So I'll read out the questions.
Sure.
Pankaj ji is asking, what is the eligibility criteria for internal auditor?
There is no eligibility criteria for an internal auditor. He should be competent. He should have the right approach.
And someone is asking, what's the right cost for internal audit work of a listed company? Is there any benchmarking?
There is no such benchmarking typically, but I can tell you from my experience, a good company where corporate governance is a prime focus area will need to spend at least 0.5% of their turnover, at least 0.5%. It can go up to 2-3% also, but that should be ideally their spend. Again, it depends whether what work they need to get reviewed. A lot of companies want to get limited reviews done as far as increments are concerned. But as I said, a benchmark from a benchmark perspective, 0.5% से ऊपर होना चाहिए.
Okay. Thank you, sir. The last question is, in computer environments, how can we detect fraud, particularly the false entries?
So again, as I said, I have given one example. I don't know whether users have been able to, see that example. But understanding of business, one. Second is to, know or enhance your SAP or ERP understanding skills. Do some courses. And third is, understanding okay, how is the transaction flowing, who is recording it, point one, whether he is entitled to record, point two, whether there are any factors which allow him to increase or decrease the transaction, rights to increase or decrease the transaction, what is actually being received, and what is the post facto transaction that gets recorded and reflected finally in the books. These are some 4 or 5 basic parameters that I would look at when I'm doing a system review. Because you're on mute.
Can you hear us now?
Yeah.
Thank you. Thank you. I was thanking you very much, sir, for this
Pleasure
wonderful,
always.
insightful session.
My apologies if there was a technical glitch and some of them could not see, but nevertheless, if anyone has any questions, you can always reach out to me. My coordinates are displayed here. And
Also,
thank you.
also the recordings will be provided on the ICI portal in a week.
Fair enough. Great.
So,
Great.
so we can watch the videos at any time.
Thank you so much. Thank you once again, the entire
Thank you.
JNK branch. Thank you, Charanjit Singh ji, and thank you, Vikas. Thank you, Arun. Thank you, everybody.
Thank you. Thank
Over
you.
to you, Prashant. All the best.
Oh, thanks. Great hearing you.
Likewise, I'm sure. All the best.
Yeah, thanks.
So now is the time for second session of the evening. The topic would be embracing technology during internal audit and meeting stakeholder expectation. The session would be taken up by CA Prashant Daftari sir. I'll just briefly read out his profile. Sir has qualified as chartered accountant in 2004. He has done articleship with N.A. Shah Associates and LLP, and now he's a partner in the same firm. He has over 15 years of experience in the field of audit and assurance. His area of specialization are start audit, risk-based internal audit, process reviews, due diligence reviews, IFRS, and Ind AS. Sir has made presentation at various study circles on various subjects like accounting standards, Ind AS, audit under Companies Act, internal audit, due diligence. He has also contributed articles on various subjects related to the field of accountancy, internal audit in CTC Journal, ETCFO, ET, and other online platforms. Welcome, sir. Welcome, Prashant sir.
Thanks. I'll just share the presentation and then we can start. I hope my voice is clear.
Yes, it is.
Is the screen visible?
Yes, sir, but not in the presentation mode.
Just a minute. Now?
Yes, it is now. Yes, it's good.
Yeah. Good evening, everybody. Thank you to the J&K branch, Vikas, Arun, Charanjit Singh, and everybody who has made this event happen. And on a Saturday evening, technology is something that has, I think, really helped us to connect. On a Saturday evening with I presenting from Bombay and the listeners across India, obviously mainly from J&K region would be the majority, but still, so I think that has brought everybody near. And the COVID was a turnaround point for many of us in terms of the way technology was used to do audits, because a lot of us never imagined that we would be able to do audits just sitting at home, statutory audits, internal audits, and also do it effectively. I think that was never imagined, but it was possible. It was made possible, and I think when there is a will, it was there. And the amount of technology that we used and the comfort that we gathered was, I think, quite enormous. And we were able to deliver the same level of reports, maybe even better quality of reports, without even physically visiting, maybe Zoom, Teams, the various platforms for sharing data, sharing information, be it the Google Drive or a lot of such things. That has really helped and make this possible. What we are going to look at it in next 45 minutes is how has technology impacted internal audit, how will it further impact, and what we need to do as auditors to stay live, stay current, and ensure that we use it in the right way and bring out the right value addition for the stakeholders. And obviously, what are the stakeholders' expectations today and how are they changing? So that is something that we will touch upon. What we will look at is, obviously, we'll go into the background a little bit, that what was IEA 15 years back, 20 years back, what is it now, and how are things changing? What are the modern technologies that are getting used? And once we understand them, how do you adopt to those technologies and what should be our response to those changes? What type of technologies can be used by SMEs, be it auditors, be it companies, in their day-to-day operations or day-to-day audit work, which can really improve the efficiency. The technology related skills which we as auditors need to have. We do not need to be experts in technology. We do not need to be a software engineer, but we need to have a fair degree of understanding of how things are happening. And the question answer sessions we can definitely take up at the end of the session or at the end of the third session, whatever is the process that has been planned by Vikas and team. That is something we can definitely look at. So if you look at the today's reality, the reality is that there are fintech companies which sanction loans by artificial intelligence or through use of robots, and that is a reality. So we have a client where loans are sanctioned through artificial intelligence. They have developed a program. The loans get sanctioned. These are small ticket loans, but they get sanctioned without human intervention. There are insurance claims being processed by the computers themselves. Obviously, artificial intelligence again is being used in a very large scale by insurance companies, mediclaim processing units, or those service providers. There are chatbots, and real-time data is being used in business, and complete transactions are happening through mobile applications. Now, this is the real-time reality that we are faced with. Now, if you are an auditor or you want to do audit of any such company, how do you think is you are going to approach it? Because if you use your traditional conventional methods of auditing, the results and the output will really not be commensurate to the work that you are doing. For example, in case of a fintech company where more than lakh loan applications are getting processed. Now, if you're going to do a test check of that, and out of that, if you're going to say, okay, I got one error or two error, will it really add any value to a large audience the way the expectations are today? Because the promoters of the fintech companies or people who have deployed such technologies would also expect somebody to be very, very tech savvy when they are selecting their auditors. They would expect you to have understanding of how the technology works, how will you audit it through the technology, all those platforms which are there, and what care, what precautions you will take, and how will you really make best use of that data, because there is a tremendous data overload which is there. So how do you address those situations? And that is a reality which we are faced today. And the traditional internal audit methods may not be suitable. I think Charanjit sir mentioned at the start that the one of the greatest advantage of technology is that you look at a 360-degree data, a complete view of the data, rather than only doing a sample checking. I think the expectations of the stakeholders are that you look at more and more data. Maybe last 3 or 4 months, the request for concurrent audit or something similar to a concurrent audit has increased multifold. And I think that is a trend that I am seeing in terms of the expectations that, yes, I am not expecting you to see that I have seen only 10 samples and everything was okay, or I have seen 50 samples in a very large company. I want you to see majority of all the transactions and give a comfort. I think that sort of an expectation is increasing day by day, because either there are online payments which are happening, the promoters have maybe delegated powers, especially the online payments. The online payments are never made by the promoters themselves, and those are delegated payments. And the biggest concern is that, is the right account number being put, or is there any fraud happening, or is the payment going to the vendor account or not? Is it going to a wrong party code? How do they do it? Is there a proper control? So that are the areas where there is a lot of anxiety among the senior management or the promoters or the directors. And we as auditors, if we are able to give a solution to those type of situations, it will be really helpful, and we will be able to bring something valuable on the table. The changing landscape of internal audit is that the transaction audit was something which was done maybe many years back. Maybe even today in some of the banks you have a concurrent audit which is happening, but really how effective is concurrent audit? If it is done just as a piecemeal approach, it may not be really effective. But maybe through the technology, if something is done on a concurrent basis or a real-time audit, maybe it will throw out real-time exceptions, and those points may become very, very important. So for example, if you have set certain parameters in terms of either rate variation or credit limits, and those variations are getting breached, and the real-time audit picks up and throws that exception to the CFO or the monitoring team, and then they are able to investigate those cases and look at it, whether those exceptions were really an exception or there is something more to it, and it needs further detailing or further audit or a further process improvement. Those really help, because it is live, because it is current, and it is error-free. The next thing, so it changed from a transaction audit to a process audit. Then you look at risk management. Risk is still the flavor, but along with risk, today people are looking at automation and digitization. That is the flavor of the day, because people have seen the 2 years of COVID. The companies who were already in an automated mode, they have really benefited. They were able to come back on their feet much faster. Companies who were completely on manual records did face a lot of challenges, and then they have learned from that. Hence, the expectation from the internal audit is moving from a transaction audit to risk management and automation. I think that is one changing landscape of internal audit, that if you are able to wanting to do a good internal audit, you will have to keep pace with this expectation and these changes which are going to happen. Maybe slowly and steadily it is happening and we do not really realize, but at one point of time, it will really hit us. One example which I would like to share is that few days back, there was an inquiry that we have from a crypto trading platform, that you do an internal audit of a crypto trading platform. Now, first and foremost, for people who have not really done transactions on those type of a platform, or you do not understand what is cryptocurrency, how do you really do an audit of a cryptocurrency platform? In terms of, whether there are maker-shaker controls, whether there are the transactions are happening correctly, whether they are as per the norms which are defined, whether the system is working correctly, whether the risk parameters which they have set are working correctly or not. If you do not understand that part of it, which is there, that is an opportunity which will go begging. Or it could be online gaming systems today, where there are a lot of companies who are mushrooming, coming up. How do you really do an audit of such company that is into an online platform, online gaming systems with likes of Dream 11 or such companies which are there? There are many such companies which are there with online gaming platforms. So that are really the big opportunities which are there. And the fee levels are also quite good in some of those companies, because obviously they have a large funding which is there, and some of them may be very profitable also, and it is a growing business where they want to do an investment in terms of their systems. So those are the areas, and that is the changing landscape where you need to look also meet the promoters' expectations. As I said, the approach of internal audit has to change. It is to be more business focused, more technology driven, and because and the reasons are compliance have increased multifold. The level of compliances which are there today, very difficult to manually control such compliances, especially in large companies, multi-state companies, you can't control. As I said, focus is now on identification and managing risk, and the businesses have become very, very complex. Plus, in addition to what is mentioned on this slide, the expectation of the general public has also changed drastically. Earlier, auditors were expected to, do a normal check, and the expectations regarding fraud was not there so much. Now, one of the expectation is that if the auditors are auditing, things are happening, they will also be able to catch frauds. The expectations are a little unrealistic, but this is how is the perception of the general public also. Because if there are any frauds which happen, the immediate next finger is on that, what were the auditors doing? What were the internal auditors doing? What were the statutory auditors doing? So that is the expectation of the public at large. And even though how much ever we try that, it is not possible, it is not practically possible, but some efforts in that direction will have to be made, and the awareness will have to be created that much greater, because and the complexities of the business have increased so much that it is sometimes really very difficult to look at how the transactions are moving, how the funds are moving, and whether whatever comfort you are giving is really a comfort, or whether you should be giving a discomfort. Some of the key areas or the key expectations which are there of the stakeholders, one of them is definitely cyber security, the risk relating to technology which are there, because technology has its advantages. At the same point of time, there are disadvantages, and you are exposed to a large risk, especially on the online payments and on the threats of the ransomware attacks, which are quite common. And you will be surprised if I say it is not only the very large companies who are exposed to such risk. In fact, the medium size and the small size companies are in fact more and more exposed to such type of risk, and it is done very, very smartly. And in fact, it is done at a time when there is a lot of pressure and a lot of stress in the organization. Maybe it's a busy day. How are they able to find out? I don't really know, but there have been such cases where either a phishing attack was made, where the email address was changed, masked, and they were asked, they requested that the payment be made to a new bank account. This is the changed bank account, and you make the payment. And many cases, people have made wrong payments, and those monies have not been traced. So those risks are there. Environmental, and ESG is the buzzing word right now in terms of the ESG standards and the ESG related guidelines which are coming out. Institute is doing a lot of work on that area, but as internal auditors, that is going to be one area definitely which is going to be focused. Regulatory and compliance. Fraud, as I mentioned in my earlier slide, is a key expectation, that how are we able to mitigate the fraud risk. One of the that is the key expectation from the promoters, that if there is a fraud happening in my company, I need to know. And as internal auditors, people look upon you. Even though it may not be a foolproof thing, but whether we are able to highlight a red flag which is there, which should have been obviously pointed out. And most of the cases times it is the basics which are not in place, be it segregation of duties, be it maker shaker controls, be it excessive powers with one individual, or access rights which are not correctly defined. Those type of reasons do ultimately emerge. Corporate governance, vendor management is another area where the majority of the frauds happen, or in terms of rates, there is always a concern. The crisis management did come into picture because of COVID extensively, where whether there are adequate systems in place if there are such crises which are there, whether you are able to cushion your organization, and culture related things, including social media, whether the tweets which are made, those are the areas which the management is looking at as an emerging risk. And as internal auditors also, you look at the processes or the systems which are there, and the understanding of technology will help you in addressing majority of these areas. Obviously some of them could be non-technology driven also, but in general, especially on the cyber regulatory fraud, the technology does play a very, very large part, including vendor management also. The expectation of the from the internal audit is very, very clear, that they need value addition, they need cost optimization, fraud, automation, and anticipation of risk. So this is today's expectation of internal audit, and this is what is to be delivered. Even smaller organizations do have these type of expectations, and hence, as internal auditors, we need to change our own mindset, because there is a pressure at both the levels in terms of fees, in terms of cost, and the expectations. This is a triangle which is there, and how do you maintain your own cost, and how do you meet the expectations, and how do you do the right charge on the client, or the right billing to the client, which is where you do not either outprice yourself or be very, very low. And then, so those are the areas which is now a challenge because of the changing expectations. And the buzzword is prevention. So what are the preventive controls that you would suggest, and what are the changes you would suggest in the current system so that it becomes more stronger, and how do you drive that point? And I think in the earlier session, Purav did mention about the communication of the points of the internal audit. How do you really bring them out? So the changes are happening very quickly and quickly. So as it is there in the slide, first it was more of a compliance driven, then they looked at give us more insight on our own systems, but now they are looking at foresight, that what is going to happen in future, what are the possible risks, can you do something more preventive? So that is something which is continuously changing, and the use of technology will try to help us bring to that. One of the promoters, when we were discussing, he used the word, I need a 360-degree audit. You do not just highlight a point, but look at it from 360 degree and give a solution which is composite. So be it a problem in terms of either open POs not being reviewed. Now they also want what are the possible risks if it is there, what is happening. Give us a solution of how it can be stopped, what are the process improvements which can happen, and whether it is getting implemented or not implemented. And you look at it across the department. So for example, whether it is a marketing department where it is happening or not happening, whether it is in the administrative department or in the procurement department, which are the departments where it is there, and each of the department could have their own problems, different problems. How do you solve that problem from a 360-degree angle? Because it is very easy to give a suggestion, but actually when you try to implement that suggestion, you will have to look at it a very holistic manner, and that is the expectation which is there. Some of these things which I've already covered, 100% verification or a 360-degree approach. Value addition is the key word, because whenever you go to the client, whenever you pitch for new work, you are talking on value addition. People want 100% verification as compared to a sample. People are looking at a cost-effective solution. So the fees vis-a-vis your time is a big challenge, and a lot of time and effort is going in convincing the management that this is my cost. The cost of chartered accountants is continuously increasing. And in that situation, how do you really leverage the talent that you have vis-a-vis the expectation, and how do you bring out the output in time? And today deadlines is also another area where you need to deliver on time, because if it is delivered late, and it loses the significance. How do you, the next section we will look at the modern technologies. How do you apply those modern technologies in your internal audit processes? And then maybe look at the areas where SMEs can, technologies which are useful for SMEs. So when you look at the modern technology for internal audit, it can be used in your planning stage, it can be used in your audit execution, it can be used in your reporting stage. I think these are the three key stages in any internal audit. Planning plays a very important role. So for example, if there is a tool like Idea, where you can do good data analytics, that really helps in terms of identifying the right sample, knowing what is the base data. So a lot of times what happens is that after doing the audit, we understand the data, the composition of the data, and by the time it becomes too late to really ask more meaningful questions. So for example, take an example of a logistics area where if the system is able to give you a report which says that this is my total logistics cost, this is my air related logistics, this is my land, this is my water related cost, this is the value of the consignment which was carried, and these are the large vendors which are there. So once that data is there on a screen, you can obviously do some mathematics and see, look at where air was used as a mode of transport as compared to the other modes of transport. So those cases can be picked up for further scrutiny. Or where you know the freight cost vis-a-vis the cost of the cargo, where it is, where what is the proportion of that cost. So for example, if the value of the cargo is 1,000 rupees and my freight cost is 500 rupees, then you can look at those cases, that is my planning proper, where, because if my freight cost is 50% of the cost of material, seems to be a little high. How do you optimize that? What are the options? What are the practical challenges? Why it did happen? Whether it is a one-off case, whether it's a trend, it's a locational issue, or it is a specific go down related issue. A lot of such data can be looked at, but this becomes a very good starting point to do an internal audit. It is not an observation that you had an air cargo instead of a you had an air freight instead of a sea freight. It's not an observation, because this becomes a starting point. From there, you really go deep into the subject and you come out with a problem along with the solution to it, that this was the problem, this happened because there was an issue in planning. The issue in planning was because it was not anticipated, or there was a communication gap with the other department, and this was the real problem. And once you really identify the problem, you will be able to give a proper solution. So from planning, it goes into the execution stage. So that is how the deployment of technology really helps in the planning stage. You can also do a small test on the data, basic test on the data to look at the authenticity, completeness. So your basic health check can happen. The chronological numbering, the duplicates, and all those things can happen. The audit execution, where technology is there, either you have a continuous monitoring control. So there are tools of continuous monitoring which can be inbuilt in the system, and that can be helpful to provide exception, as I said earlier, if those things happen. Some red flags can be thrown out by the system themselves, and you can look at your control stimulation in terms of whether the controls are in place or not. The system generated exception reports will help you. Report writing and reporting is another area which takes a lot of time in internal audit, and it is one of the more critical functions in the internal audit, and you cannot take it rightly. But if technology is used, it can help in standardizing some of the processes, some of the reports, and the formatting, the quantification of risk, or in terms of the high, low, medium analytics. A lot of those things can get inbuilt into the system, and the human intervention can be that much lower, and it can reduce that much more time, and you can make a more presentable report to the management. some of the modern technologies that are getting used. Obviously, artificial intelligence is something which is getting used more and more extensively. It is a subject by itself. As I said, I had given you an example in terms of whether loans are sanctioned by artificial intelligence uh, uh, automatically without human intervention, though there could be a limit, but still, there are. These are I'm talking about large books, large NBFCs, insurance, or it could be credit card companies. The artificial intelligence is playing a very, very key role. For example, if you do a certain transaction above a certain limit from your credit card, there is an automated calling which happens that to confirm whether it is your transaction or it's a genuine transaction or not. It's an automated call which comes. So this is what an audit indirect control which is there. Some of the internal auditors would have been part of the entire system design where you said that, if there's a transaction, there has to be an automated calling. And if the automated calling does not work or it gets unanswered, then it gives another red flag to the system, and then it goes to a human that there is a red flag here. Please look at this transaction more closely. So if those things happen on time, you are able to prevent a lot of frauds or a lot of issues which could arise out of that. We as internal auditors need to understand where artificial intelligence is used. How will you audit those things? What are the parameters set in the system? How it is working? So you need to take a deeper understanding of those areas, sit with the chief technology officer or the software engineers who are responsible and try to understand how the system is working, where there are controls in the system. If there are certain transactions which are there, various situations which are there, you try to do a test simulation data, that if these are test data, see what is going to be the result of this with the different variations. So those type of steps has to be taken by the internal auditors to understand the systems in deeper detail and see if there are any loopholes within the system, because that is where the people who are playing frauds are able to intelligently look at the risk within the system. So for example, we were looking at an online banking solution which was there, and it was through a batch technology where all the transactions for 1 hour, they get parked in an encrypted file at a common place in the server, and then after 1 hour, the bank will pick up those transactions for payment processing. Now, the question is that even if it is encrypted in your own server, is there a risk of somebody hacking that file and making changes to it? Now, theoretically, there is a risk. Somebody with a good knowledge of technology can play wonders to it. So now as an internal auditor, do you really understand how the files are moving from one place to another? What happens at the back end when the online payments are happening? So if you go a little deeper into those things, you may be able to identify possibilities of some risk. We are not saying that every time it will happen. It could be 1 in a lakh or 1 in a million transaction which would happen. But if it happens, it could be a high impact risk. So if you have understood this background chain very clearly, you will be able to bring up to the senior manager. This is the area where there is a little bit of a risk that for 1 hour it is there at one place, and if it gets changed, if it gets amendment, though it is an encrypted file, there is some exposure. Now the management can decide to take a call that fine, it is okay, it is not okay. That is a different matter. But if you have not understood the back end, how things are getting processed, it becomes very difficult for you to bring value on such areas. Process mining is another area where through event logs, you look at how the process has actually happened. So you map all the event logs and then you see that if these event logs are there, the process happened in this manner, but my SOP suggested to happen in this manner. And that will throw out gaps in terms of whether the processes were completely followed or not followed. So that is something which is an indirect way through the system of identifying the non-compliances with the standard operating processes. It could be the dating issues or the delays which are there in the processes or any backdating which is happening. Especially in regulated businesses, this becomes very, very critical. Robotic process automation is another area which is picking up pace, and you will see a lot of videos on YouTube if you type robotic process automation, because these are areas where you have a robot which is there, and that robot is coded, or the steps which you are to follow. For example, you take an example of a bank reconciliation process which can get automated, and there is a robot which is there. You train the robot in terms of these are the steps that you need to do. So step 1, download bank statement from bank website. Step 2, download bank statement from Tally, SAP. Match bank statement with bank ledger or bank book. Identify deviations. So those steps which are there, and the robot is able to do that day in, day out. As Saranjit sir was mentioning, it is a tireless process. So it continuously can keep on doing such things. And instead of a human, it can throw out the exception that these are the 5 open items, and human can has just look at those 5-6 items and then close it. So if you want to do a daily bank reconciliation with multiple locations, multiple bank accounts, people have used payroll processing, be it interview scheduling, a lot of such processes, AP/AR processes, people are trying to automate through RPAs. It's a large area of field where internal auditors, along with software engineers and the solution providers of the automation solution providers, 3 get together as a project. The internal auditors help in defining the systems, the controls, the check, what should be the steps which the robot should follow, what maker checker controls, where human intervention is required, where it is not required. There the internal auditors give the advice and the consulting to them, and the coding team implements that, and the project is rolled out. So this is one very new area of business opportunity also. And if the robotic processes are being used and humans are not being used, what are the possibilities that on vouching verification you will find errors? It is next to, I mean, 1 in million you may find errors. I'll be surprised if you find an error when robots are getting used. So the errors or the type of errors will change, it will be different. So for example, if the system has not been correctly defined, or while defining the system, some steps have been missed, or some controls have been missed, those are the areas where the internal auditors will have to highlight and say, these are the areas of risk, this control is not there. And in this certain situations, your result or the desired output may not be correct, or somebody may play mischief, or you will have a completely wrong output. So this becomes relevant because the number of transactions could be very large. And if 1 or 2 processes or controls do not be there, you could have large items which would go wrong. You would have seen one, I think there was one, I'm not sure, one of the banks, there was a report which where the payments were happening through the system automated, but it was automated disbursements happened and it were not approved. So something went wrong with the system. So that was there in the news. So those type of events do happen. Now, how do you as a internal auditor, what role do you play if some of these events happen? The question will obviously be asked that if the internal audit was happening, what did they look at? Advanced analytics is another area where there are a lot of tools, a lot of programs which are there, and they get installed and they work along with the operating ERPs which are there, and they create dashboards, they create exception reports, they create specific reports which are there for the management, the MIS reports or the except red flag reports. Those are defined. You work along with the technology team and create those advanced analytics. The example of logistics, which I was mentioning earlier, so the advanced analytics can create those reports, and that becomes as a dashboard on a CFO's table, and he looks at that, and then he may be curious to that, I want to understand this transaction. Now, in an internal audit, you can also use those analytic reports and make it a starting point for your audit. Because by the time you reach at that level of analytics, your audit will, after 30-35 days of audit, you may reach that level of analytics. But this analytics, if they are readily available, I think it will give a completely different dimension to what value you can add. You can really go deep into the problem, because one of the expectation of the internal auditor now is to go to the root cause, the 5 why theory, which is there, where you keep on asking the question, why did it happen? Why did it happen? Why did it happen? What went wrong? Why did it go wrong? So you keep on asking these questions continuously till the time you really understand the root problems and you address the problems from the root. And this really helps in giving you the space and the time where you can focus your energy on the right things rather than just gathering information, gathering data. First, gathering data in a format that you want, arranging everything, and then questioning, doing the trend analysis. You can really save a lot of time. These are some of the slides which I really spoke about in the while I was explaining earlier. Yeah. So one of the main reasons why a lot of organizations moving towards boards is that 24/7 work can happen. So especially in the areas where people are in outsourcing business, where you need a continuous support, the cost per transaction has to be brought down significantly. When there are large volumes, people are looking at the automation processes at a very, very large scale level. The advanced analytics, which I was talking about, where the data is continuously being looked at and the analysis is being brought out. These are all live information which you get, not at the month end, not at the quarter end, not at the year end, but it becomes very, very live. And when you look at live information, you get that data. You can use your skills more productively and make real impact. As auditors, technology can be a threat and can be an opportunity. When you are looking at the technology, if you look at it in a very positive way, it's a very good opportunity. There could be new business areas in terms of being a bridge between the process owner and the technology partner. Because yes, as I said earlier, when you look at robotics implementation, you have a technology partner, you have the process owners, you have the software guys, and one thing which you provide all three can't do is understanding of the system and processes, understanding of the risk, and how do you implement that, and how do you manage a project. So that becomes a very good role for the internal auditor, because you understand the organization, you have the confidence of the owners, you have the confidence of the directors, and you are playing as a bridge. You can be a good project manager, you can do the process documentation part, the suggestions on the processes and implementation part of that, and then continuous review and monitoring. So those are the areas where you can play a big role. Identifying areas where automation can really bring down cost. That is one area, or in the internal auditor, you can continuously look at that. As an internal auditor, you can make suggestions or talk to the management that these are the areas where you can use automation, reduce cost. So for example, if there is a duplication, or if there are significant human time and efforts which are going in, you can look at what are the solutions which are available. It's not no point just saying that you automate it, but you'll have to bring a solution on table saying that this is the software which is available, this is the cost of the software, even if it is an approximate cost, this is the problem that we are having, this is the time that we are spending, use this software, it will reduce your time significantly. As an internal auditor, if you are able to give this solution, the respect that you will have will go up substantially high, because you are adding real value. Creating checklist, creating control points for continuous monitoring of the areas which are getting automated, very good opportunity. Because the processes are changing, the risks are changing. It's not something that you create once, it will be valid for your lifelong. So those are the things which are very, very relevant. The review of the outcome, the review of the results which are there, defining standard parameters, exceptions. So what should be the exception? What are permissible? Because we as internal auditors have a holistic experience of working with multiple industries, multiple companies, multiple organizations, multinationals, domestic. So you have a holistic idea. So you can define that you can have this is an exception which is okay. Beyond this is not okay. You can guide, especially in the SME sector where there are young entrepreneurs or the upcoming growing companies where the promoters look at you as your eyes and ears, or somebody who will really be a bankable person in advising in any solution provider. So those are the areas, and the image that we need to create in front of our clients is that we are not only problem identifiers. We identify the problems, we understand what are the solutions available, what are the technologies available, how do you really implement that and change the problem and control the problem or resolve the problem. So that is the change that we have to look at, because traditionally audit has a very, very negative mindset, or it's look at audit matlab mistake find karne ka hai. Auditor means finding mistakes. Now, when you start any activity, the other person automatically becomes very negative. He said that he's going to find out my mistake. Why should I tell him that these are my problems? But in an internal audit, it has to be different. We need to explain that, we are trying to help you. I identify mistakes or identify errors to look at a possible solution to help you. It's a process related gap which has to be resolved and not a human generally. So those are the things which we have to create. And when we have a good holistic understanding of technology, we can create that image and create that benchmark. So some of the examples which has been done practically where the technology has really helped is some of the predefined reports. So for example, in internal audit, we have one standard observation is that PO was created without PR, or GRN was made, but PO was not made. So if there is an automated report which comes in the system that for so many PR, there was no PO, or for so many PO, there is no PR. If that report is automated, the entire activity need not be repeated. It becomes like a dashboard. Exception reporting, like an SMS which is going to the MD or the CFO, is that credit limit breached. Unusual payment happened, payment of more than 1 crore happened to this person. So those could become like an automated exception, unusual transactions where you define that. Automated calls to customers. Selection of high risk areas for deep dive. But technology will throw out, okay, these are my exceptions where deviations are greater. You look at that and then identify the risk, and then you do a deep dive. So for example, there are companies which may have 100 branches. Now, if there are 100 branches and you have to select which branch has to be audited. One is that you do your traditional way of looking at it, where the transactions are more. But can it be more scientific? Can you look at which branch is sending MIS on time, which branch is having least turnover of employees, which branch is having more customer complaints, which branch's collection pattern is better. So it could be so many parameters. So once you define those parameters and system automated gives you some of those results, you may be able to do a good scientific selection of your sample and make it more effective. In today's era, time is a matter of constraint. Cost is a constraint. So whatever effectiveness has to be there, it has to be first time right. And when you use the technology along with the right parameters, you will be able to really dwell and ensure that you have got it right. Automating certain audit procedures, missing serial numbers, duplicates, those can be completely automated. The standardized reports can be there. At least 1 or 2 days of effort could be saved, especially in a repetitive audit. where you are doing a quarterly audit, half-yearly audit, annual audit, you set your 5 or 6 steps which are defined. You put it in the software, use macros, even if you're not using a high-tech software, define those processes and let it be a part of the planning process, and that you have already done some of these basic steps before you really go into the audit. Credit risk assessment is one area where in terms of the debtors, because that becomes one of the always it becomes a critical area. Another area where technology is there is defining the dashboards or exception reports. I have given one sample in the next slide, which is there. So those, you sit with the management, define those dashboards, and that can really add value. That you are sitting with them, you are participating in that area, and you are defining the dashboard that this is what we need. Let it come in this manner, so that this is where the management is looking upon you. That you just don't say you create a dashboard, but how do you create? What do you create is something that has to be looked at. So this is one example of an interactive dashboard, which is there. If you click on any of the icons, you can further drill down. And some of these are the areas. If you look at the screen, there are some drop boxes. So if you look at the drop down boxes, you will get further details. So you can look at product wise sales, month wise sales, totality, entity wise data, customer wise data, and it is there on one screen, and you click and you get the drill down. So that on a live basis, it becomes very, very useful piece of information and can then lead to something else. If there's a drop in sales in a product, further inquiries can happen. It gives a starting point for a discussion sometimes. So those are the areas where you can sit and define. There are tools which are available also for internal audit. So you have auditing softwares where your documentation, your planning, your monitoring, your tracking, work paper management, it can also be done through softwares. GRC software and tools are there. You can customize some of those softwares where your report tracking, so how many carry forward observations, how many new observations, how many open points, how many close points. Sometimes this information can be very useful when you are discussing with the management. So for example, if you have an internal engagement on a monthly basis or a quarterly basis, some of those tracking system can be a very good talking point, that there are 20 observations which I identified. Out of that, 5 are open, 5 are closed, so many were new points, so many were carry forward points. So it could be a good way to look at the internal audit observation, the effectiveness of the audit also. Resource management could be looked at through the entire internal audit software. So that are some of the areas which really are helpful. Benefits, it is quite obvious, is that utilization of scarce resources in today's world. As much as we say the resources are very, very scarce, how do you effectively utilize those resources becomes a very, very important thing. Cost vis-a-vis fees is a perennial challenge. I think people hearing are more aware than me about this challenge because we face it on a day in, day out basis. The efficiency of the internal audit team is one area which is of a constant debate. That are you doing the same thing over and over again? Are you having repetitive questions? What happens when team changes? But if your software is used to a good extent, some of these problems could be solved. The answer to a lot of problems is that how do you really have a better software? Because if your team is going to change, and if the software has a lot of data which is there, the transition to the new team could be that much more easier. Obviously, there will be problems, but the efficiency level could be better. And especially if the teams are getting repeated, the efficiency could be of a very, very different level. So there is an investment and then there is a benefit out of that. Increased coverage is something which everybody is looking at. Sample check versus 360-degree checking or a complete checking of a database is something that is really a critical expectation today. Audit committees, promoters, they are really looking at how do you do a more 360-degree checking. Focus on non-conventional areas, because if you are able to standardize some of the conventional areas by technology, the internal audit can really look at areas which you have not touched upon. You can really look at efficiency, you can look at production, you can look at risk management in real sense, insurance. Some of those areas can be looked at it in real depth and not basic coverage, but you can really go deep into the policies, look at the conditions, look at the exclusions, look at the quotation analysis process, go very deep down, and you will be able to identify 1 or 2 points definitely which could be of a value. and do non-conventional areas. It could be audit of a marketing department or audit of IT department, um, audit of marketing schemes, effectiveness of marketing schemes. So those type of really non-conventional areas could be looked at, and it can happen only when you standardize the standard areas, so that you have time, energy, and the budget to look at some of these areas. In terms of technology for SMEs, Microsoft Excel, unbelievable technology. The SME companies as well as the medium-sized firms, Microsoft Excel is something which is very underutilized. You can do a lot of you can create dashboards, live dashboards. So, for example, there is a data's dashboard which can be created. If the data's aging is correctly pasted, it automatically gets updated, and this can be done through a slicer function in Microsoft Excel. There are pivot tables which are there, which we can use. There are obviously some of the functions which are there. VLOOKUP, HLOOKUP, people do use extensively. But if you use it in the right way, macros is another area where you can do the repetitive functions. If you make a macro, the repetitive things can be done without efforts. So Excel is there. Detailed training of Excel is something which is must. Refresh courses may be attended. Microsoft Access, Power BI. Power BI is another tool which is an analytical tool. It gets linked to Excel, and there are a lot of reports which can be generated from Power BI. It is like an analytical tool, works very well with Excel and some of the other software. Microsoft Access is another database management tool where you can do a lot of analytics. IDEA is one software. It's an audit software, audit tool, where you can do all the analytics. Some of there are predefined functions which are there, like duplicates, missing, trend analysis, comparatives. Some of those data is already there. Sampling can happen through that. And what another advantage is that it documents all the steps that you do, so that it can become a good working paper reference. Tableau is a presentation tool where you can present your data to the management attractively in the right manner. So these are some of the tools which can be used. They are not very expensive. Training in some of these is, maybe we can have champions on Excel within office, and then they can train other people. But something which needs to be implemented in right earnest. Maybe the larger companies, they have specialized tools, but this is something which is also good enough for this medium size and the smaller entities. This is something which I did mention on slicer, pivot table, macro. So inventory, some of the applications are, if you would do pivot table for open PO, inventory aging, open PR, you do VLOOKUP, you compare. A very interesting example which we saw where VLOOKUP really helped. We compare the PAN number in the employee master with the PAN number in the vendor master, and surprisingly, there were 3 or 4 common items. So that is the red flag which did come out. Somebody just thought of doing this exercise, that let us compare the PAN numbers in the employee master vis-a-vis PAN number in the vendor master, and we found common PAN numbers. And further, if you go deeper into that, there will be much more to it. So need not really say that, but some of these observations really help if you're able to use and connect the data. Connecting the dots, connecting the data, this becomes very important. And as I gave that example of the common PAN numbers, it leads to something quite large and a good value to the organization, because obviously something wrong was happening which has got stopped, and action was taken based on that. What type of skills we as auditors require? We definitely need general IT knowledge, understanding what are the technological risks. So for example, in an online payment, what are the risks which are there, where human intervention is required, where it is not required, where there should be a segregation of duty, where there should be a control. We need to understand that part of it. How do you mine the data? Because today you have a data overload. For example, I said, if there are 1 lakh loan applications which are processed in 6 months, now out of 1 lakh, we need to look at how do I find out where there is an error or where there could be an error? So now what data, how do I look at the data? How do I arrange the data? How do I really apply my data skills and bring out the right thing out of the data? So what pivot table should I use? How do I see what information first? How do I correlate two sets of information which are not there or which are there in different files, but we need to correlate them to bring out something more meaningful? Those are the skills which are there where experience, understanding of technology is becoming very, very important. I mean, this is the mindset which is there, that we need to move from being completely naive to somebody who is more data analytics enabled. So as we move further up, we are able to contribute more and more. So we need to understand at which level we are and where we are moving towards. Because the organizations, the larger companies, the forward-looking companies are really moving very, very fast towards the technology. And if we as auditors stay behind, we may not be able to demonstrate our skill sets when we are pitching for work, or the organizations may find that my auditors are not keeping pace with my requirements. The summarization is, the technology is the only way forward. We need to be involved from planning stage to support the automation process. There is a cost which is required. We need to upgrade. So investment is there in terms of time, in terms of money, but it is needed to deliver better value, add value. It is a myth that technology is only used for large organizations. For smaller organizations also, it is very, very important, and they are equally vulnerable to the technological risk. And we need to ensure that there is a maximum coverage with minimum time. I think that is a motto which we all internal auditors should have. I think, thank you very much. I think I may have overshoot my time for maybe a little bit, but thank you very much, and I'm ready to take questions.
Prashant sir, thank you very much for this wonderful session. Can I please request if we can take the questions at the end of the session?
Sure. I'm okay with that.
So in the meanwhile, I'll just welcome CMA TV Venkatraman sir, sorry, on the dash. So he can share his knowledge on the internal controls over financial reporting, the third topic of the day.
Thank you, Vikas, and good evening to all. Am I audible? Is it
Yes,
clear?
pretty much, yes.
All right. We've had some very good insights from both the earlier speakers, Purav and also Prashant. I know we are at the fag end of the session for the day. Unfortunately, I do have a hard stop at 8:45, so there are certain other commitments that I need to, leave for. Having said that, I will keep it, quite engaging in terms of, I'm happy to answer questions if there are questions during the session. And also, the other question I actually had was, how many participants are there? I mean, I would like to know the size of the audience, because accordingly, I would also like to understand the audience mix before I run the session actually.
So we have around 1,300 to 1,400 participants right now.
Excellent. And mostly practicing chartered accountants?
Not sure about that.
Okay, no problem. So let me do one thing. Let me hook up the presentation that I have, and some of them could be, a bit of a theoretical aspect, but let me keep it as interactive as possible. Is the presentation visible to all?
Yes, sir, it is.
All right. So thank you once again for the opportunity to the Institute of Chartered Accountants of India and the Internal Audit Standards Board. And I understand this is being hosted by the Jammu and Kashmir Council. So with chapter. Let me just, without much ado, move into the presentation structure. So what I will try and do is, I want to give a perspective on what really is internal controls of financial reporting and what is the difference between internal financial controls and the role of the internal audit function in this journey, and how do we support management? Because otherwise, the role of the internal auditor in this entire IFC effort is something that most of the CA firms or most of the practicing chartered accountants would be quite interested to know about. We all know, way back in 2002, we had multiple accounting scandals which came into public light, specifically in the United States. And if you talk about Enron, if you talk about WorldCom, Xerox, or Tyco, these are some of the companies which have had significant accounting, misdemeanors. And there was a whistleblower incident which actually blew the lid on the accounting irregularities at Enron, which also, as many of you would know, brought down the largest accounting firm, global accounting firm, Arthur Andersen. So, and I'm going to be skipping a few of these slides because in the interest of time, I know we have about 20-25 minutes for me to run the presentation. The slides which are not relevant, I will not spend too much time on. This is to only give a context about the companies. And so if you look at the changing regulatory landscape, as you know, corporate governance has not been something that happened only after 2002. Corporate governance evolution happened way back from 1950s to 1960s. And, if you look at the regulations post the Enron scandal, I think there was a lot of awareness with respect to internal controls, and you had the internal controls frame. I mean, post the Sarbanes-Oxley Act, you had the internal controls framework being updated by the COSO. In 2013, you also had the enterprise risk management framework being updated and brought out by COSO in 2017. In India also, we were not spared. I think accounting scandals, and that's how the entire concept of internal financial controls came into the picture. But there were a series of scandals, the largest one being Satyam, and of course, followed by a few others such as Kingfisher and so on and so forth. The Companies Bill or the Companies Act of 2013 was actually revamped to bring in a lot of changes through the Ministry of Corporate Affairs with respect to the entire gamut of internal financial controls, both for public listed companies and the applicability for private limited companies as well. A lot of the genesis of this came out with the changes to the SEBI's Clause 49 of the listing agreement, and we have a few provisions which I will take you past in the next few slides. So Clause 49 of the equity listing agreement brought up the responsibilities of the board with respect to what the board should fulfill in terms of its responsibilities with respect to ensuring integrity of the accounting and the financial reporting systems. And there are independent mechanisms to verify the control mechanisms, including that of risk management, financial and operational controls as well. They also brought about the role of the audit committee, which will include the oversight of the company's financial reporting processes, and also with respect to the fact that the financial statements are correct and credible, which is the true and fair view of the financial statements, and also in evaluation of the internal financial controls and the risk management systems. So there is a lot of onus that has been placed on organizations, specifically the public listed companies, with respect to evaluating their internal financial controls. From the point of view of the information which is reviewed by the audit committee, there are letters of internal control weaknesses which have been reviewed, which have been tested for by the independent auditors and then placed before the board after the independent audit is carried out. Under SOX, if I have to go back in time, the PCAOB, which is the Public Companies Accounting Oversight Board, had brought out the definition of internal controls over financial reporting, which is actually a process which is designed by the CEO and the CFO of the organization to provide reasonable assurance with respect to the reliability of the financial statements, and that the financial statements have been prepared in line with the generally accepted accounting principles. This also includes policies and procedures that pertain to the maintenance of records, which covers all the financial assertions to ensure that the financial statements are accurately and fairly represent the transactions and assets of the organization. Which also provides reasonable assurance that transactions are recorded to permit preparation of the financial statements in accordance with the GAAP, and all expenditures are made in accordance with proper authorizations of the management as also the board as appropriate. And last but not the least, provide reasonable assurance with respect to the timely detection of unauthorized acquisition, use, or disposition of the assets that could have a material impact on the financial statements. Now, I know this is a lot of theory, but to keep it simple, the CEO and the CFO certification under clause 49 is also similar to what the PCAOB had brought about. So under IFC, which is the section 134 clause 5 of the Companies Act 2013, you will find that the definition is pretty much consistent with what we just saw with respect to what PCAOB had defined, that the internal financial controls means policies and procedures adopted by the company for ensuring efficient and orderly conduct of the business, including adherence to the company's policies. It also includes safeguarding of assets, the prevention and detection of frauds and errors, and last but not the least, the accounting accuracy of and completeness of the accounting records and the timely preparation of the financial information. So the statutory provisions under the Companies Act, I will just leave a minute for all of you to take note of the fact that there are various provisions, and each provision places different responsibilities on the relevant stakeholders. For example, under 134, you have the director's responsibility statement, which states that the directors had laid down internal financial controls to be followed by the company, and such financial controls are adequate and operating effectively. Under section 143, you have the independent auditor's report, which shall state whether the company has adequate internal financial controls with reference to the financial statements in place and the operating effectiveness of such internal financial controls. So both the design and operational effectiveness shall be reviewed by the independent auditors. And under section 177, the audit committee shall evaluate the adequacy of the internal financial controls and the risk management systems. And this is basically based on the assertion or the readiness testing that has been done by the management before and subsequently validated by the independent auditor. Last but not the least, and in fact, if I have to take a bit of a practical view here, I think when I go back in my journey for one of the larger public listed companies in India, we had to work very closely with the finance team, and I was leading the internal audit function. So we work very closely with the finance function and also with the independent auditors to really scope in what are those critical internal controls over financial reporting or internal financial controls, which will be required for an auditor, the independent auditor, to provide an attestation on. And having said that, the statutory provisions also extend to the fact that this applies to the all entities having independent directors, that they shall satisfy themselves on the integrity of the financial information and ensure that financial controls and systems of risk management are robust, and also the adequacy shall be evaluated by the in the board's report itself. So a few classes of private companies have been exempted. I will just spend 30 seconds on this. The applicability of IFC does not extend to private companies, specifically if the company is not a small company or a one-person company, and a private company which has a turnover of less than 50 crores, or also an aggregate borrowings which is less than 25 crores. We will skip these slides. This is a quick depiction of the ambit or the coverage of internal financial controls under Companies Act. And if there are questions, I think it will be important, Vikas, if you can just let me know if there are questions, I'll be happy to answer, because I would like to leverage my practical experience in this journey rather than talk about the theoretical aspects under the regulations. I think most of it is already available in public domain, but happy to answer questions because that's how the session can be made much more effective.
Currently,
Right.
sir, we are not getting any questions
Okay.
on
All
this
right.
topic particularly.
All right. So in terms of what controls are subject to management's assessment, and like I said, I do have a hard stop at 8:45, so I'm going to be wrapping up the session in the next 10 minutes to do justice to the Q&A session. And happy to share the presentation with the audience through the ICAI once the session is done. So the controls that are subject to management's assessment includes all internal controls over the initiation, recording, and processing, and reconciliation of account balances, and also related assertions that are included in the financial statements, which relates to completeness, accuracy, validity, cutoff, presentation and disclosure, and rights and obligations. Right. It also relates to the application of relevant accounting policies and also the prevention, identification, and detection of fraud. We will leverage the fact that most of the companies today adopt or have adapted the COSO internal control framework, which covers, as you know, the 5 components of the internal control framework, covering control environment, risk assessment processes, control activities, which are used to manage the overall risk, and then the feedback and the communication mechanism is also monitoring, and the objectives cover the operations of the organization, the financial reporting, and compliance. As far as internal financial controls is concerned, it covers the effectiveness and efficiencies of operations, including safeguarding of assets, reliability of financial reporting, and those laws which directly relate to the preparation of financial statements. The 5 components of COSO and the 17 principles are already there in public domain. I would say that from a management point of view, the evaluation of the internal controls will also include an assessment of the control environment, which means that one will have to look at whether the company has designed appropriate policies and procedures with respect to the code of conduct, whistleblower policy, whether they have the right entity level controls with respect to board governance mechanisms, maintenance of minutes of the meetings, and so on and so forth. The risk assessment covers all risks related to financial assertions, which can impact the risk of misstatements. And therefore, to that extent, the controls will have to be developed or designed which prevents the risk of misstatements. Policies and procedures will also be part of the overall control activities. And last but not the least, the monitoring activities are done through the internal audit mechanism or through such other independent oversight mechanisms, which ensures that the internal controls are working effectively. As an illustration, I do have a few examples with respect to how an organization will cover entity level controls, the policies and procedures, the financial reporting controls, and overall the IT related controls. It is also important to note that, and I think in my the previous speaker had already highlighted the relevance of technology. And in today's environment, all the business processes are operated in a technology driven environment, and hence the risk of material misstatements occurring through internal control deficiency in the technology environment is something that will also have to be evaluated by the audit function as a part of management. So if I have to wear the hat of management, an internal auditor supports management in the testing journey, which is actually an extension of the management's assessment of the design of internal controls and the operating effectiveness. And now, why is this different from internal audit? Because IFC is always at a point in time, and internal audit is over. It's a reasonable assurance over a period of time. So there is definitely a distinction which IFC has vis-a-vis internal audit. Entity level controls will also include aspects relating to whistleblower mechanisms, the overall effectiveness of ERM, the code of conduct and ethics, the anti-fraud programs, and so on and so forth. The transactional level or business cycles that will be covered will include all those significant accounts to which the processes have been mapped. Typically, it could include purchases, it could include revenue, which is the order to cash cycle. It will include aspects relating to the overall supply chain management, and also aspects relating to fixed assets such as acquisition and safeguarding of assets, payroll, and so on and so forth. So these are normally in a large organization, you will find that these are the significant accounts to which the processes will get mapped. And at the end of the day, it is also based on a concept called as materiality. So while the statutory auditor may have a threshold from a planning materiality point of view, from a management point of view, the materiality threshold percentages may be applied at a lower level so that you cover a larger scope of processes to ensure that there are no risk of material misstatements in the financial statements. Moving forward, the financial reporting controls include all, it also includes your direct your journal entries and so on and so forth. Let me move forward here. Controls will be both preventive and detective. It will include segregation of duties, application controls, and from a detective point of view, all reconciliations and physical verification mechanisms. Both manual and automated controls will have to be tested, and depending on, if a control is automated, the test of controls may be one, whereas if it is manual, we will have a different sampling size that may be adopted. And I'll come to that in a minute or two, because we do have a slide which talks about how the sampling, what the sampling framework can be adopted. As you know, control activities are those that include preventive and detective controls, and the related financial statement assertions include authorizations, completeness and accuracy, access to assets and substantiation of balances. And to that extent, the controls will be to ensure that transactions were executed in line with the management's authorization. That is, you have a delegation of powers, and all transactions are in line with the delegation of financial powers. It also includes access to assets are permitted in accordance with the authorization, which means your physical access controls to the inventory, your even in the systems, your physical and logical access controls to the IT operating environment, and so on and so forth, right? From an IT point of view, you look at application systems, all applications that are relevant to be scoped in with which cover or which support the key business processes. And these include your IT general controls with respect to change management, physical and logical access, your business continuity and disaster recovery, your data backup and restoration. Today, most of the transactions are done in cloud. And if you do rely on third-party service providers to actually manage your data, for example, if payroll is outsourced to your third party, how do you ensure that the IT processing environment, which is operated in the third party, is actually effective? So you get a SOC 2, SOC 1 and SOC 2 report, which is actually a security operations control report from the third party to ensure that, which has been attested by an independent agency to ensure that the controls that are operating in the third party environment are working effectively. Right. So application controls also include your reports. So any key reports on which management places reliance to make a provision for doubtful debts, as an example, those key reports, the data integrity with respect to those reports will also have to be independently validated by the management. So primarily what one would do is look at all the change management processes with respect to how such reports are generated, and making sure that the integrity of the data is not compromised. Typically, in an IT environment, you would look for confidentiality, integrity, and availability of information. And a statutory auditor is also interested to know whether the data that is being shared or being generated by the application system, whether the integrity of the same is being maintained. Incidentally, I also want to highlight the fact that it is important for organizations to look at the segregation of duties within the processing environment. How do you ensure that, from a fraud risk point of view, that there are no unauthorized transactions performed by individuals who should not have the right to perform a particular transaction because their role does not warrant that? So you typically look at the dump of transactions from the system and look at the logs or transaction IDs to confirm that the person who has performed the transaction is actually responsible from a role point of view, and there are no conflicting roles that are vested from a profile point of view with the same user. So as a part of the management testing, segregation of duties review was integral to looking at your IT controls as well. or the application processing controls. We have looked at the accounting assertions coverage. I have about 5 minutes left in this session, but I just want to leave with you 2 or 3 important aspects here. The entire IFC effort, or internal controls of financial reporting, or internal financial controls, whichever way you look at it, will have to have multiple phases, which includes right from the scoping and planning phase. At each phase, when you do your scoping, it is important to understand the, at what threshold you will apply the materiality, and how do you scope in the significant account balances from your general ledger, and making sure that the right processes are mapped. And from the map, you draw out your process maps. So if you look at the significant processes, as I mentioned as an example, if revenue, payroll, and your purchases are your 3 significant accounts, but your other account balances such as travel expenses or marketing spends are not very critical, and they fall much lower than the threshold limits that one has adopted, you, from a material misstatement point of view, those account balances could be eliminated. But it is important to look at entity level controls, the business processes that are mapped to those significant accounts, and also the underlying IT applications, and the relevant IT general controls and application controls in which those transactions are being processed. So the planning phase is where you would spend maximum time. The testing phase is more or less pretty much straightforward. You look at the design and you look at the operational effectiveness. When you evaluate the design, you actually do a walkthrough of the transaction. Then you also get a sign off from the business process owner to say that the business process is indeed the way it has been understood by the auditor. And moving forward, then you do the testing, including the test of controls that you would do for the operational effectiveness. So you document your test procedures, you document the sample size that has been collated to undertake those test procedures. And where a control has failed, you would also need to perform roll forward testing after the remediation. So in each of these phases, it is important to engage with the independent auditor as well, if you're doing the testing on behalf of the management, and make sure that the independent auditor is fully subscribed, or fully aligned with the test procedures that have been adopted by the management. And once the test results are validated, and if the test has been passed, you could actually share that with the independent audit team to then perform their attestation of the management's certification of the IFC. Post that, once the remediation testing procedures have all been completed, then you would report on the outcomes of the IFC to the board or the audit committee of the board from a management certification point of view. So each of the phases, I have just tried to map that out. I think the phase relating to evaluation of the controls at the entity level, post that transaction level, and at the application level, and then you establish appropriate monitoring systems to ensure that the controls that were not working effectively continue to work effectively. And in terms of really the project plan, I think you need to have a steering committee which looks at the progress of the IFC efforts, and then you have the internal audit team which coordinates. In my earlier role, I used to actually coordinate this with the support of a third party, and then we work very closely with the finance function, the IT function, and the statutory auditors to make sure that the entire project went on smoothly. So this is an extract from the ICAI standard on sampling, and as I said some time back, if it is an application control which is related to the way it's configured in the system, it becomes a preventive control, and that needs to be a test of one. But for other controls which are manual in nature, depending on the frequency of the control activity, you could have different thresholds for the sample size. And if your risk of failure is low, you could typically restrict the sample size to 25 for recurring manual controls, which are multiple times a day. But if the risk of failure is more, or you do have control deficiencies of which you've noted in your sample, then you extend the sample to a higher sample of 40. And if it still doesn't pass the test, you need to remediate the process before you undertake a fresh round of testing. So as an example, when we document the controls, it is important for us to look at the control objective, look at the supporting business process activity or the nature of the business, the nature of the process, the underlying risk, the objective, the control objective with which for which you're performing the test. What is the control procedure? Who's the person in charge of the activity? And what are the relevant data points that you've collated to ensure that the test has been completed. You also document your control activity attributes, the financial assertions, and moving forward, once you conclude on the test, and if it is effective, then you pass the the IFC testing, right? Otherwise, if it is ineffective, you need to perform the remediation and update the documentation as appropriate. So if I can sort of summarize, this is the quick snapshot of the journey from an internal financial controls point of view, right from planning to the evaluation of the design, evaluating the design of entity level controls, operational controls at the process level, and looking at the IT general controls and the application controls, documenting the results and making sure that it is not seen to be a one-time effort and the company continues to build and sustains the overall control environment. So it is to be treated as a project, but a project which has a continuous, which is in a continuous journey for improvement. So I think I'm sorry to have rushed the presentation. I actually would have loved to spend more time, but I'm constrained for time at this point in time. So Vikas, back to you. Happy to answer questions.
Thank you so much, sir. Thank you for this wonderful session. We do have quite a few questions here now. Somebody wants to know what are the provisions that are specifically applicable to private limited companies with turnover more than 50 crores.
Yeah, so as I said, for a private limited company which has a turnover of more than 50 crores, your internal controls over financial reporting only applies. It's not the operational, the operational controls will not apply. It is not IFC. The distinction is that for private companies, it will be internal controls over financial reporting. And for public listed companies, it will be internal financial controls, which means policies and procedures and also operational aspects with respect to safeguarding of assets, etc., will kick in for public listed companies. So that's the very minor distinction.
Thank you, sir. Next question is there any good software in the market which can help in recording, assessment, review, and record keeping of controls and related action points?
So we actually used SharePoint to, store all the testing results. And, there are multiple softwares. A lot of GRC tools are available in the market. If you're using SAP, you have SAP GRC tool, in which you can populate. There are multiple tools, and I think I would not be able to name anything in specific as such, but I'm sure the previous speaker could actually, if he's on the call, can highlight what are the tools that are there which can be leveraged for the IFC testing.
Yeah, there are multiple, as sir said, there are multiple tools which are available. So some of the auditing tools like even idea and all also can be used because you can have a complete trace of what you are checking. So then documentation, so those can be used. Excel itself is quite a good tool if you use it effectively, because for especially smaller size companies, it is useful. If you are deploying it properly with proper password controls, it can be useful. As I said, idea is there. Storing data, SharePoint has been widely used, as sir rightly said. So these are the few things which are definitely available.
Yeah. Thank you, Prashant.
Thank you, Prashant, sir. Last question, Venkat, sir. How internal financial control is helpful as a warning system for a company before going into IBC?
I think it's not just through IFC. To be honest with you, I think IFC is a bit of an overkill in my personal view, actually. If you have a robust internal audit system and, given that in today's age, everybody is using technology to a large extent. And when you have a concurrent audit or technology-driven audit, your sampling methods are not restricted to 25 samples or 40 samples. While that may be a guidance, I think you actually do 100% verification, right, of the transactions that are recorded in the system. And your exceptions are always looked at to see what went wrong or what has been the underlying cause which led to the gap. To the extent it is operational nature, of course, you may not have it in the system. But as an example, the physical verification of assets, or for that matter, your operational controls with respect to quality, and so on and so forth. Or even compliance with regulations. I mean, if you have a robust compliance management tool and you're managing your compliance with regulations in an effective way, because you have a software that captures what are the required compliances, and you're also making sure that the respective compliance owners who are responsible to manage such compliance, whether it be in the factory, or whether it be with respect to GST, or whether it be with respect to any other aspect of the regulatory landscape that we are in. I think if you have a robust internal control mechanism, and using the internal audit mechanism, and using the COSO framework, and you have a robust way of feeding that information back into the management for appropriate correction almost on a real-time basis, I think IFC, to my mind, is more of a tick in the box. It becomes a compliance exercise because the government has brought out that regulation. Yes, we've needed the regulation because of the irregularities of the accounting scandals that we have had in the country as well. But hopefully that is not the only solution. I think it will have to be a combination of an effective management team. It will have to be the effective tone at the top, as entity level controls are nothing but tone at the top, the culture of the organization, which actually drives a robust internal controls of financial reporting, or internal financial controls at the end of the day. So to come back to your question, the question was whether IFC will, if you have an effective IFC, whether it will prevent insolvency from happening. It again depends on what you want to drive through the IFC efforts. You can have a situation where the operation is successful, but the patient has died.
Thank you very much, Venkat. That's the
Thank you.
questions. Thank you for the wonderful session, sir.
I may log off with your permission, and I would like to
Yes.
acknowledge and thank the ICAI for this opportunity, and thank you for the participation.
Thank you very much, sir. Hi, Prashant sir. Can we
Yeah.
take up the Q&As from your side?
Yes.
Thank you so much, sir. So somebody wants to know, can you please help differentiate between SOPs and RCM? And second, risk management and internal audit.
So the first thing is SOP and RCM.
Ji.
So RCM is risk control matrix, and so is a document where you list down your risk and define those risks, whether they are control, what are the level of risk, whether they are high risk, medium risk, low risk, and what are the controls which are there to mitigate those risks. So it is a state document that how are you controlling your risk in that sense. If, for example, you take purchases and you have defined the risk as bills being passed without material received, or material purchase at a higher rate. These are the risks that you have defined, and what are the controls you have, and what is the frequency of control. So that is the document, which is the RCM. SOPs are the detailed steps which an organization or a department will follow. These are my SOPs, these are my standard operating procedures. So for example, my purchase team will do these steps. These are the frequency of the steps. These are the people who are authorized to perform those steps, and these are maker, these are checker controls. So what happens is that typically a good RCM has a cross-referencing with the SOP. So when your RCM control is there, you define that this control is mentioned in my SOP para number so much. So they complement each other. So there will be some areas where you will find some of the steps which are there in SOP are controls which are also there in the RCM. So for example, if it is said that 3 quotations have to be obtained, that will be there in the RCM as a control, and that will be also be part of the SOP. But SOP will be much forward. It says that if 3 quotations are not there, or if they are not possible, what has to be done? What next? Do I take a further 1 level higher approval, or do I do something else? Or there are items where 3 quotations are not required. That could be all part of the SOP.
Understood. Thank you, sir. The next question is internal audit is just like
So
post-mortem.
that had one more thing that you wanted to understand. There were 2 points in that. One was
Just
SOP
two
versus
points.
RCM.
The
Second
would
was
be, risk management and internal audit.
Risk management and internal audit. They are different, but they at some point of times do touch upon each other. So similar to RCM, risk management, a lot of large companies have a document on risk management where they identify the risk, they document the risk. So for example, if foreign exchange is my risk, is customer going away my risk, what is methods to mitigate those. Usually risks are either transferred, terminated. Sometimes you have to accept those risks, or you have controls which you put in there. So that are the ways in which you look at the risk management. It is slightly more holistic method, and the internal audit could be one of the sub parts of it. When you look at the end, people look at enterprise-wide risk management. So it's a much more larger thing. So that I have identified my risk. These are my methods in which I will tackle my risk. The role of internal audit is that whether it is happening or not happening. So if I had decided that insurance will be taken for all material which is lying at a job worker's location, that is my risk management philosophy. The internal audit will look at it whether it is effectively done or not, and highlight cases where the processes are not followed. So it will be one of the subcomponents when an enterprise-wide risk management is done. It's more of a monitoring. The role of monitoring comes to the internal audit, but defining the broad, identifying the risk, defining what is my steps which I have to take to handle those risks is more of a management philosophy, because each management will want to handle it differently, and when the business changes, you will have to change the risk also. So it's a small part of the enterprise-wide risk management, as it is said.
Understood. Thank you, sir. So this is the last question. Internal audit is just like post-mortem of the system or the transaction. How internal audit can be put for error-free transaction in system?
So people are now looking at this. It's a very relevant question because people are wanting that internal audit should be more and more current. And so if you use technology within your systems, some of the controls can be automated. So sometimes, there is a control that all GRN should have a PO. No GRN, no GRN without a PO. Now, if there is an inherent control in the system, you automatically put a control that there cannot be a GRN if there is no PO. So that is a control that you have put. What did you achieve? Is that this becomes a risk-free, that if GRN has to happen, there has to be a PO. So that becomes a automation. Similarly, for different other transactions. So for example, I can put another level of